Welcome, dear traders. We are watching a recap of the Asian session. Stock indexes rose significantly following a recent rally in the US in the Asian Pacific region. They were mainly up amid expectations and predictions. However, they had to retreat again due to uncertainty. Today, trading is likely to be rather volatile as the US traders have returned to market after a long weekend. Stock markets in Asia and Australia are mostly in the red today. US stock futures are also down. At the end of the last week, the fourth quarter earnings season kicked off. The first revenue reports were quite positive. It facilitated a rally on Wall Street. For example, the quarterly results of large banks topped expectations. However, financial conglomerates warned of a possible recession. They said that they stockpiled more rainy day funds due to the worsening economic outlook. For this reason, the results were quite mixed. The World Economic Forum and the World Bank are also worried about a potential recession this year. A survey published at the Davos summit showed that 2/3 of chief economists expect a global recession this year, with some 18% considering it extremely likely. Despite signs of a decline in inflation, major central banks remain strongly committed to aggressive tightening, so a surge in a risk appetite will hardly take place. Traders are likely to wait for fresh macro stats from the United States and the results of the Bank of Japan meeting. The Japanese stock market is still on the rise today, unlike other equity markets. Today, the Bank of Japan has begun its two-day monetary policy meeting. Perhaps Haruhiko Kuroda will hint at the chance of a near-term exit from an ultra-loose monetary policy. Earlier, the regulator made small changes by widening its tolerance range for 10-year Japanese government bonds. Chief Cabinet Secretary Minister Hirokazu Matsuno said on Monday that they expect the Bank of Japan continue with the appropriate monetary policy, taking into account the economic situation. Inflation in Japan has already soared to all-time highs. Import prices are also rising. The yield on 10-year government bonds is stubbornly trying to break out of the upper limit of 0.5% set by the regulator. At the same time, few analysts expect a change in the key rate, which currently stands at minus 0.1%. They assume that the regulator may adjust in interest in the government bonds. As for the Fed, investors doubt that the central bank will be able to raise rates about 5%, and this is the main reason why the US dollar is trading with a bearish bias. It's now hovering at a 7-month low. In the Asian session, the US dollar index fell to 102.30 versus its main rivals, and today's greenback rebound looks like a technical one, and traders looked some of its profits. In the morning, the US currency was fluctuating not far from the previous closing level of 102.20, moving in the range of 102.20 and 102.60. The greenback declined significantly after the opening of the European session. It's likely to remain volatile until tomorrow's publication of the US economic reports. The yen is also sensitive to the US macro stats as well as to the Fed's rate decisions. It could become even more vulnerable to these fundamental factors if the Bank of Japan decided to keep monetary policy unchanged. However, analysts do not expect drastic changes in the Bank of Japan's policy. Its previous decisions on government bond yields have already been factored in. Yesterday, the dollar-yen pair dropped to a low of 127.20, a level unseen since June last year. However, on Tuesday, the price jumped again to 128.50. Ahead of the Bank of Japan's rate decision and the good news from China, the pair dropped to the range of 128.20 and 129. Keep in mind that the trajectory of the pair is also impacted by the rate gap between the Fed and the Bank of Japan. Given that the Bank of Japan is highly likely to stick to its dovish stance and the Fed remains hawkish, the pair is sure to keep growing. The Australian dollar advanced following the US dollar's consolidation. Its growth was also bolstered by positive GDP figures from China. Before the publication of GDP data, the Chinese regulator once again poured 504 billion yuan of liquidity into the country's banking system via the reverse purchasing agreements. The Aussie as a proxy for the yuan also benefited from it. The opening of China's market, the Australian players will the commodity prices, so commodity currencies climbed as well. As the greenback remained weak, the Aussie jumped to 0.6957. However, risk appetite is fragile. For this reason, the AUD-USD pair has slid in the price corridor of 0.6949 and 0.6918. And that's all for now. Subscribe to our channel and keep close tabs on the market developments with us. See you soon.